Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
It's a new trading day. Welcome to Modern Investing Techniques, episode 68. I'm Patrick in Vancouver. Today is June 6th, 2026. Today's markets have some interesting setups. Let's break them down. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian investors holding U.S. index exposure just saw the S&P 500 post its worst day of 2026. So rechecking stop levels and sector weights before Monday's open is the immediate priority. Markets closed sharply lower with the S&P 500 at 7,384, down 2.6%. The NASDAQ Composite finished at 25,709, down 4.2%. The TSX Composite closed at 34,414, down 2.3%. The S&P 500's worst session of the year coincided with fresh geopolitical headlines out of the Middle East. 15 days ago, we entered CNR after a multi-year correction. The position closed up 8.66%. Investors should watch how index rebalancing flows interact with today's volatility into the June 22 effective date. With volatility this elevated, one strategy is already positioning ahead of mechanical index flows. Here's how. Index reconstitution creates measurable short-term price pressure on both additions and deletions because passive funds must rebalance holdings on or before the effective date. Today's announcement that Marvell and Flex will join the S&P 500 while Pool Corp and Campbell's are removed gives active investors a narrow window to front-run the mechanical buying and selling. The strategy is to screen for names with high passive ownership that are also additions. Size positions small enough that the expected 3 to 8% inclusion pop still clears transaction costs. Implementation is straightforward on any platform that offers pre-market trading. Place limit orders the Friday before the June 22 effective date and exit once the rebalancing volume subsides. Historically, this works best when broader market volatility is low. The current geopolitical backdrop raises the risk that the move is swamped by macro flows. Risk is therefore managed by keeping the position under 2% of portfolio value and using the 20-day volume average as a confirmation filter before entry. While we wait for the right volume confirmed setups, let's quickly cover the options basics that can generate income in the meantime. Imagine you own 100 shares of Royal Bank of Canada trading at $145, and you want extra income while you hold through a quiet summer. You sell one covered call with a $150 strike expiring in 30 days and collect a $2.10 premium. Your effective sale price becomes $152.10 if the stock is called away. That premium is compensation for giving someone else the right to buy your shares at $150. A call gives the buyer the right to purchase at the strike. A put gives the buyer the right to sell at the strike. The two Greeks that matter most for covered call writers are delta, how much the option price moves with the stock, and theta, how much value the option loses each day as expiration approaches. Most retail investors never open the options chain to see that the $150 call is only $2.10 because they assume options are only for speculation. The biggest mistake with covered calls is selling naked calls on stock you do not own. Instead, always start with the covered variety on shares already sitting in your TFSA, so the maximum loss remains the decline in the underlying shares minus the premium received. That same discipline of waiting for aligned factors shows up in today's practice investment decision. This is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. No new position was initiated today. The Bank of Canada rate decision scheduled for June 10th creates a potential catalyst in Canadian financials once the policy path clarifies. We are watching for any name that closes above its 50-day moving average on volume 50% above the 20-day average after the announcement. Geopolitical volatility remains elevated. Any entry will carry a 6% stop loss from the Monday open. The target would be 4 to 7% over the 5-day window if conditions align. Confidence is rated low because this is a single catalyst without confirming volume yet. Skipping a trade when sector concentration and volume rules are not met demonstrates the discipline of waiting for aligned factors, rather than forcing exposure. The lesson is that capital preservation sometimes means holding cash until the setup meets every checklist item. Speaking of discipline, let's review yesterday's NVO trade that didn't work out. The last weekly hold was NVO on a catalyst entry for the first global launch of oral Wegovy outside the US. Entry came at $45.39 on Monday open. Exit came at $43.75 on Friday close. The result was a loss of 3.61%, or $36.13 on a $1,000 position. The trade lost 3.61%, while the NASDAQ fell 4.2% over the same window. The launch catalyst failed to produce follow-through once broader market volatility increased. The new rule is to require both a fundamental catalyst and a volume spike above the 20-day average before committing capital to healthcare launches. To stay sharp on these setups, here are 2 tools worth adding to your workflow. The Fidelity In the Money Options series walks through 2 live trade ideas in major tech names using real options chains and Greeks. It gives intermediate investors a repeatable framework for evaluating premium levels and risk-reward before placing orders. It is best suited for TFSA or margin accounts where options approval is already in place. Access is free inside the Fidelity Learning Center. Subscribers can set push notifications for the June 10th rate decision directly from the central bank's site. This removes the need to monitor multiple news feeds and lets Canadian investors pre-position cash or hedges ahead of the announcement. It is free and available to anyone with an email address. Before we wrap, 3 quick headlines that may affect positioning. Dollar General reported that its primary shoppers are cutting back on food and household items, signaling continued pressure on low-income consumer spending. The action is to trim exposure to U.S. consumer discretionary names that rely on value-oriented traffic until same-store sales stabilize. Largest U.S. banks plan a shared tokenized deposit system for 2027 that could improve settlement speed for institutional clients. The action is to add a small allocation to U.S. money center bank ETFs on any pullback below the 50-day moving average to capture infrastructure spending. California and New York are reportedly readying legal action against the $110 billion Paramount Skydance deal for Warner Brothers. The action is to hold off on new media sector positions until regulatory clarity emerges. Existing holdings should carry tighter 7% stops. Finally, here's your action item for the weekend. Open your brokerage platform, pull up the options chain for any Canadian bank you already own, and note the premium on the 30-day out-of-the-money covered call. Calculate the annualized yield if that premium is received every month. Write the number down so you know exactly what income you are currently leaving on the table. Before we wrap, watch for volume confirmation around the Bank of Canada decision on Monday. That wraps up today's modern investing techniques. Remember, every trade is a learning opportunity, win or lose. Subscribe, share with a friend who wants to invest smarter, and we'll see you tomorrow. And before you go, this show is part of the NARA Network, a family of daily podcasts covering tech, science, markets, and more. If you enjoyed today's episode, give Environmental Intelligence a listen, the Environment and Climate Policy Brief for Canada. You can explore the whole lineup at naranetwork.com. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you did